So in reading your tweet, you made a point that actually it's not just your policy of zero tariffs, it's also President Trump's. Is he going against his avowed principles?
Unfortunately, the trade deal's a mixed bag. It provides certainty compared to the threat of tearing up NAFTA, and that'll be good. The short-term increase in the market would be our prediction. But in the long run, it moves away from his goal of zero tariffs. The content restrictions, the wage and price controls in Mexico, all of that creates more barriers to trade. And in the end, that means for the economy, resources are diverted into certain sectors that are less efficient, and that will hamper growth in the long run.
From what you understand of the agreement, and I have not seen the text, I'm not sure who has, from what you understand, are there any provisions that you would say are actually pro-free trade?
Looking through the summary that's out in the press, it looked like there was some good advance in the agriculture sectors. And as I said, the fact that there is now a new agreement emerging creates certainty for trade, and that in and of itself is a good thing. I wish they would move the other direction in the content restrictions and forget about trying to set wages and prices by the government. You know, I tell people who don't think about trade and economics, this is like raising your kids. If you spoil them, send them to a good college, but they don't learn how to work, they come home and they sleep in your basement. And that's what I'm worried will happen to our auto industry. They'll be pampered here at home, and they'll lose out in the worldwide competition. Because you can bet Japan, China, Germany, Brazil are all going to be out there taking advantage of lower cost inputs, lower wages, and in the end, that will hurt us.
President Trump, though, says that everything that he's doing in revamping NAFTA is in order to create more jobs here in the U.S. Will it do that?
In the short term, yes, but frankly, in the long run, in order to be competitive, we're going to see continued efforts by companies to move their capital overseas where they can take advantage of lower cost inputs. You can try to regulate higher wages and more jobs, but the market forces will eventually dictate that capital flows where it's most efficient, and that will hurt us in creating jobs. The tax cuts and the deregulation have been great. We've seen growth in the employment sectors there. This will have an immediate benefit to the finance markets where there's stability now in the trade agreements. But over the long run, those type of requirements end up hurting you and creating fewer jobs.
David, what happens if there's no breakthrough between the U.S. and Canada is left out of the NAFTA deal?
That would be hugely detrimental to Canada and to the United States. As was pointed out earlier on your show, the majority of our exports, or the largest amount of our exports, go to Canada. If we stop having trading relationships with them, that will hurt U.S. industries here. It'll hurt the North American auto industry. So my sense and the read from the public signals they're sending is Canada realizes we've got to get to a yes. We'll see what they hold out for. My hope is that Lighthizer and the folks around President Trump also realize they've got to get to a yes to complete the deal.
David, one place where we've heard very explicitly from the president about moving toward zero tariffs is with respect to the European Union. Do you have a sense of where those discussions are? Because we talked to Commerce Secretary Wilbur Ross yesterday, and he gave us the decided impression they are not going very fast at all.
I don't think there's a lot of follow-through with the great meeting that the president had with the head of the European Union. It would be wise for them to finish this work in North America and then put to bed the European agreement, because you're going to need North America and Europe as a united front going back to China, where there are some it's really rule of law issues where they don't respect our intellectual property rights. And we've got to have a unified message to China. You want to play in the world marketplace, be respected. You've got to live by the rules of free and fair, open marketplace, and that includes respecting property rights.
So David, let's turn for a moment to the midterm elections that are coming up in November, and specifically the Senate race in Texas, where it was thought at one point not that long ago that Senator Cruz's position was really safe. At this point, that seems to be much closer, within maybe 4 points in some polls. And as I understand it, the Club for Growth, is putting some real money into that race. Why?
As you know, we were one of the big backers of Ted Cruz early on when he ran for Senate, also when he ran for president. He represents a lot of what the Club for Growth stands for: limited government, more freedom. And you're right, we're looking at those polls that are out in the public, and we're seeing it's become a closer race. I think Ted's going to win, but what it told me is we can't take it for granted. And our mission will be, Mr. O'Rourke, the guy running against him, has an image out there that really doesn't fit his record. And what we'll do is tell the voters the truth about Congressman O'Rourke.
We're, of course, now getting also second quarter GDP data about the economy. That's something that Republicans want to run on. But still, we're seeing consumer spending, real disposable personal income being revised down. How strong of a message can this be for candidates in the Republican Party?
I think the economic message has to be the front leading wedge for them in order to keep their majority and to win. And what they've got to point out is we've made great progress on taxes. We've made some good progress on deregulation, but the health care issue is still a complete mess. We need to bring in free market principles there. And frankly, we need to control government spending. They've got to basically go to the American people and say, look at your 401ks. They've been growing steadily since Republicans were in charge. That'll be threatened if the Democrats get back in power in Congress. They want to take away the tax cuts. They want to take away the deregulation that have propelled us there. So protect your 401ks, keep the Republicans in charge, and let them keep building the economy.